Kitco Mining special coverage of the Mining Investment Event of the North is brought to you by EMX Royalty Corp.
Critical metals are a major focus here in Quebec City, and they've been a major draw for investors in recent years. I'm joined now by Joe Mazumdar, editor and publisher of Exploration Insights, and Rick Rule, investor and speculator extraordinaire. So we're going to have welcome both of you, and thank you for joining us today.
Thank you.
Always a pleasure. Now, we're going to have a bit of a conversation about critical metals, kind of a mini panel. So I'm interested in hearing what you guys think of one another's views on these as well. We'll look at lithium, copper, nickel, other minerals. But to start off, I'd like to get a sense from both of you about the overall picture. How would you characterize investor interest in critical metals right now?
I would suggest that retail interest is fairly high. The professional interest, and I don't just mean institutional interest, but rather ultimately user interest, corporate interest, is extremely high. Obviously, too, government interest is becoming higher and higher as we form sort of national blocks around economic self-interest. So I would describe it as very high. I'm not sure among the length and breadth of the retail mining investor, which is to say the typical original Kitco crowd, that the critical metals theme has caught on as much as it's likely to in the time to come. But in other levels of the investment and political ecosystem, interest is extremely high.
What do you think?
Yeah, so a couple of years ago in the letter, we've been moving towards, the critical mineral theory, let's just say. And when you get to the point where people are talking about it at the coffee shops and it's in the newspapers, it's all in the headlines. As Rick said, the governments are talking about it. People are legislating it. It's on everybody's mind.
All right. Now, looking at legislation, we saw the passage of the Inflation Reduction Act. How has that impacted battery metals, critical metals across the board?
Well, it helps with respect to bringing them up in terms of what you were saying is like how well do people know about it. That Inflation Reduction Act brought that more to the forefront about how do we help support the development of these minerals in our own country and with our allies or free trade agreement countries. The other thing is that they have this EV credit, and that sort of constrains the supply if people use that credit to buy their electric vehicle, because increasingly the amount of the mineral, the critical mineral, or the component of the car part has to come from countries designated by the U.S. And that's why there's a lot of countries scrambling around the world trying to get into that group of countries. And from what I've seen, originally that group was limited. But I see this Secretary of State Anthony Blinken traveling all around the world, like he was in the DRC and Zambia in November last year, trying to get more exposure to cobalt and copper there, even though there's no free trade agreements with any of those countries.
Right. So there's on the government side, there's a real recognition that these are critical, not just critical in the sense of investment opportunities, but critical in the sense of being able to continue to build out the infrastructure and the technology that major economies will be relying on in the coming years.
Yeah, but I would say that there's a gap between maybe the understanding that they may be required for whatever they're thinking with respect to energy transition, and how do you actually execute this plan? And there's a very big gap of knowledge.
Okay. Now, the Inflation Reduction Act also contains some provisions that ought to at least speed up permitting for mining in the United States. Rick, what do you think about that? Obviously, permitting is a difficult area. It's that's where things slow down. That's where things get fuzzy. Do you think that this is going to have an impact on permitting of new mines in the United States?
Absolutely not. Joe's Canadian, so he's very polite. The Inflation Reduction Act is a dog's breakfast of political auctioneering and promises. It doesn't do anything to reduce inflation. It advances the interests of various interest groups who are powerful in Congress. Every time that extractive industries have increased a federal nexus around their business in the United States, the result has been disastrous for the industry. And this will be no exception. the promise of subsidy, it means the promise of control. Who pays the piper calls the tune. While I'm amused, I guess, that the government has for once signaled the fact that they shouldn't be constraining mining, the probability of something good coming out of an increased federal nexus is horrific, to the extent that the Biden administration or whoever the subsequent administration is, Republican or Democrat, manipulates the levers created by the Inflation Reduction Act, means really more opportunity for politics and less opportunity for progress. My hope is that separate and apart, or perhaps in spite of whatever dictum comes out of Washington, that the mining industry and their industrial customers drive the future of battery electric metals. The promise for expedited permitting, as an example, will run immediately into NGO opposition, but it will also run into local voter opposition, NIMBY opposition. People who, as an example, celebrate living with a mining tradition, but don't want a mining presence. People who believe that the Inflation Reduction Act will do something for the mining of critical metals or something beneficial for society at large are, I think, destined for major, major disappointment.
All right. Now, we've also seen legislation in other jurisdictions, in Canada and Australia in particular. Do you see this as encouraging? Do you see this type of support? Obviously, there are variations here, but do you see this type of support as a net positive for critical metals and for the industry, or is this going to be more complications or just creating new variables?
No, I think the funds involved in helping development projects that are in the theoretical orphan period in your Lassonde curve is helpful because they can come in, bring in 100 or 200 million to these billion-dollar projects, which I think is very encouraging. But a lot of these projects require a lot of infrastructure, and to commit to that, and then you open up a whole region. That's really what's needed. I mean, if we talk about like the casino project with in the Yukon, that project's been around a long time, Western Copper and Gold. I've been to it. Infrastructure is very challenged. It needs 100 megawatts of power. So not only do they need road access, they need a power. They need to either generate it themselves or try to connect Yukon to a better grid. That's going to take money, and that's not in the capital for the company. Somebody else should have to do that. In Quebec, they've tried to do that. But I think if the federal government can do those sort of projects that open up a district, and then suddenly a lot of these projects can open up, that would be good. And wouldn't be specific to any specific mine, it would be to a region.
And what about Australia? They have programs to support this as well. Is that going to be a positive? Because I'm hearing kind of two tracks here. We have government involvement, which potentially creates more red tape or more risk, essentially, for the industry. But we also have support, which is valuable, even if it's not representing the entire infrastructure.
If we just take permitting in a nutshell, how do you advance a project into construction? One is the federal, state, if you're talking about the U.S. county, and in Canada, it's the province. But if the province gives a permit, the most important part is the First Nations. If they're on side, you're good. You're going to get your permit. If they want it and they're for the project and the benefits agreement is good, you'll get the project. If they're against it, and this is globally, if the locals are against it, it ain't going to happen. There's no point in fighting it. And whatever policy the federal government comes up with in any country, it won't change that because they have to live with it. So they can change permitting like, okay, this will be quicker turnaround, but it doesn't change the probability of actually being able to do it. That doesn't change. Okay. And what Australia is trying to do in Canada is just increasing capital to projects. And Australia's had a good history of being able to develop these projects with the capital markets they have. Canada, it's been more difficult because those projects tend to be more infrastructurally challenged.
Well, United States, Canada, Australia, they're very similar countries in some ways. You have local jurisdictions, you have state, you have federal. What about China? I mean, obviously China's very, very big on the critical metals side. They've been obviously investing in supply. They've also been building out infrastructure. This is everything you guys have been speaking about. They don't necessarily have the problems you're describing. If China wants something to happen, it's going to happen. You're not going to get local level opposition to major projects. What is China's impact in this space? I guess to begin with, how does this argument fit into the China context? And then what is China's overall role in the critical metals side?
It's been suggested to me that in China, 10,000 people matter. So politics is somewhat more constrained. Traditionally, dissent in China, getting in the way of the Communist Party of China, has not been a very healthy strategy for individual citizens. That being said, the center does have to pay attention to broad politics, but traditionally the Chinese have been able to take a much more strategic and a much less political sense of economic strategy and resource development. I know that Xi Jinping once, when I asked him about a permit in China, said, if we apply on Wednesday with a fulsome application, we normally have a permit in a week. That's maybe an exaggeration, but it certainly isn't consistent with what happens in a more broadly representative democracy or even in a republic. So I suspect that depending on your point of view, if your point of view is as a resource developer, the Chinese system is extremely efficient. It's worth noting in critical metals, particularly rare earths, that traditionally the Chinese dominance in rare earths has had to do with high-quality deposits, but also complete disregard for the environmental standards that would have been applied to those projects in the West. One of the things that I think raises the price of rare earths is that increasingly even the Chinese state is unwilling to accept the environmental degradation that occurred in Western China as a consequence of the way those materials were exploited. So what you're seeing in China, despite the fact that it's truly a totalitarian regime, is that over time, environmental standards have become important to the Chinese people and as a consequence of the Chinese state. And that's going to lift the prices, I think, of all of these materials. And I think it's also what's part of what's driving the extraterritorial expansion of China Inc. with regard to securing metal supply around the world.
All right. So let's look at another thing that has a major impact across these metals. We have different battery chemistries. So a lot of this conversation is about obviously electrification, solar, mostly just electrification across the board, and these are very metals heavy operations. But automakers are trying to reduce their costs. They're also trying to secure their supply chains a little bit better against risks and shocks like obviously the Russia-Ukraine conflict. How is this? What is the potential for this to impact the demand side for all of these metals?
Yeah, well, I think we touched on a bit off air about nationalization of the lithium sector in Chile and in Mexico. Mexico mattering less than Chile, obviously, but and that's not going to impact the near-term market. But as soon as some of these major leases expire in 2030 and 2040, it will. But the other issue is that exploration and foreign direct investment in Chile to develop lithium will basically die on the vine right now because you were obliged to joint venture with Chile, with the Chilean state entity, and then give up operatorship. So that might constrain supply a bit. But, the thing about lithium is that lithium is everywhere. It's just the price dictates where you're going to source it from. So if somebody comes up with a way of getting it out of brines cheaper, you're not going to mine spodumene dikes at 1 to 1.5%, generate a 5 to 5.5% con and ship it to Asia. It just won't make any sense because the price won't be there. So I think that's where people like Elon Musk say, oh, lithium's everywhere. That is the perception that technology could break the lithium market and do something there, and I think that's what everybody's sort of planning. It's more problematic for cobalt.
Okay.
I think the interesting part of the question goes to the emerging technologies. At Sprott, we tried to talk to the automakers, and we tried to talk to other big distributed storage, fancy word for saying battery, users. And what they all said was that the technology was moving so fast that you needed to pay attention to all the technologies. You needed to pay attention to vanadium redox, as an example. You needed to pay attention to a whole group of battery technologies. And I need to say, as part of the Sprott team that was doing that, rather than finding any conclusion which I could relate to the Kitco audience, I came away as confused as they were. You know, it's a sort of a watch this space. Are we going to need this technology? Yep. This one? Yep. That too. The next one? Absolutely. And a couple more that we don't know about. That's one of the reasons why the space is so amazing. We talk about this in the West really in the context of vehicles, electric vehicles. But the bigger issue really is the urbanization of the world. The bigger issue to me is 1 billion people on Earth with no access to primary electricity. 2 billion people on Earth with access only to intermittent or unaffordable electricity. When you talk about batteries, it's not just vehicles, it's distributed storage. And when you talk about critical materials, it isn't just batteries, it isn't just generating electricity, it's distributing electricity and then using electricity. And it's not just in vehicles, it's in the homes of 3 billion people who are urbanizing. If you look at the last bull market in commodities, 2000 to 2010, the story, in addition to underinvesting in productive capacity, was the emergence, the urbanization of China. The next story is India, Malawi, Bolivia. That, to me, is the story. And I think the story is much bigger than electric vehicles.
Yeah, I absolutely agree. And that's why I'm more focused on copper, because all that, I don't really have to concern myself as much with technology changing about the battery chemistry, is that the infrastructure will be the same. And that will need copper.
Right. Well, that brings us to copper, and I guess we can start looking at some of these specific metals as well. So we've talked about lithium a little bit. Rick, you've said that you're confident that you're more confident in copper than any of the demand for copper, I guess, because based on what you're saying, that the infrastructure is where the real definite cost, where the real demand is going to be for the foreseeable future. So what are the prospects for copper as an investor in 2023? What would you be looking at in the copper space?
Well, I like copper for historical reasons too. Copper mines can be big, and big mines can make big money. I remember making a list years ago of mines that made $1 million a day or more, and they were mostly copper mines. So I'm attracted to copper for backward-looking reasons as well as forward-looking reasons. But I note that as a society, we have been underinvesting in copper exploration and copper development for decades. If you look at the copper mines that produce the copper that we enjoy today, I'm looking at the camera now, these mines look like me. They're 70, they're long of tooth, they're past their prime, right? Bingham Canyon, 150 years old.
Oh, they're just reinvesting in that. So you got
110. Well, yeah, I'm reinvesting in me too, but you know what? Time's not on my side. The point of all this is that in the face of this upcoming demand, we're living on copper deposits that are, at the very least, at the peak of their prime or past their prime. And the incentive price for a lot of these new copper porphyries was sort of $5 or $6 billion front-end costs and grades that are 0.3 or 0.4. We aren't talking about $3 US a pound. You know, we're talking about $4.50 or $5 a pound copper to maintain the supplies of copper that we're likely to need in 10 years. What can go wrong? Real easy. A recession. You can reduce supply if you reduce demand and have no impact on price. But from my point of view, absent a recession, 5 years from now, copper prices are materially higher than they are today.
And I think, like Rick, we talk about demand, but it's really a supply issue. Like what he said about the underinvestment, the lack of exploration, and that also people holding back on imminent investments, like let's say El Abra, Freeport. Cerro Verde was solvent extraction electrowinning, and then it went to sulfides, and then they did a mill expansion, and that went fine, and that was done in Peru, and that was several $1 billion. And now they want to do the same thing with the El Abra project, convert it from solvent extraction electrowinning to a milling and making concentrate, but they haven't done it yet. Why? Because they were worried about the new tax policies in Chile. and they still haven't made a decision on it. But that one would come into the window, but it may not. And the problem with a lot of the copper supply and demand is they're assuming a lot of the stuff that's brownfields is going to come in when it comes in. And a lot of the policies that are happening in Chile and other places are deferring some of the brownfields. So even the stuff that we had high probability, we can't really be sure. It'll come on, but it might not come on when you think it's going to come on.
And that creates price shocks. That creates short-term gaps or medium-term gaps.
Medium-term gaps. These are capital-intensive businesses that take a long time to permit. In the United States, there's a wonderful copper deposit called Resolution. 1.5% copper, median average grade worldwide is 0.5%, so 3 times the average grade worldwide. It's been in permitting for almost 25 years. So even assuming that for a while you had the incentive price and you had some capital availability, the ability to deploy capital is politically constrained. And as Joe rightly pointed out, investment decisions are increasingly being driven by political agendas, by the fact that if you spend $5 billion in Chile, if the Chileans, as an example, trap $5 billion of your dollars in a mine, they nationalize it on the installment plan with taxation and royalty. It's difficult to make a $5 billion decision if your host hasn't decided if you get the $5 billion back.
You're right. These are very long-term. Never mind permitting, getting into operation. Right. Now it's actually making money, and that's still at risk.
And keeping it.
You contrast that with what Canada just put together, and now they're introducing this 30% tax credit on 30% of your upfront capital costs if you get a project starting development or getting in by 2024. And so that supports payback and also makes your project easier to fund from a banking perspective, because you're going to get more money quicker. So that's the sort of incentive. If they want to do something like your Inflation Reduction Act or whatever, if those sort of policies would drive people to say, hey, I could mine a little bit lower grade, or I could do this project, even though it's a higher capital ticket, I'll get the money.
Ironically, the best fiscal policies for mining in the world are in communist countries. The depreciation schedule in Japan is nil. You expense those apps.
So you're not paying taxes like for 5 years?
You aren't paying any tax until you've recouped all the capital. If you, as an example, in the United States, the major items are straight line depreciation over 30 years, so 3% a year depreciation. In China, for that same investment, you would expense it. It's ironic that from a business person's point of view, communist China is substantially more free than the United States or Canada.
All right. Well, I guess maybe to end on another area of potential risk, but also potential upside, depending on what side you're on. The prospects for M&A in this space in the coming years. Are today's valuations still cheap based on these projections we're seeing of such increased demand? So we've heard from Mark Selby about nickel demand. His company is expecting nickel demand to double by 2030. We're hearing similar projections, more than double for silver by 2030. These are all 2030 numbers, but they're all being estimated upward. So if we're seeing this type of demand, if we're seeing constrained supply, if everything you're saying is true, what are the prospects for M&A and what are the valuations today looking like to both of you?
Yeah, well, I would say M&A for all those metals that, and each company is different, what they want to focus in on. Some people do want to focus on lithium, nickel, and copper. Other people might focus just on copper. Other ones might focus on something completely different. What I'm seeing is copper M&A, and people start with buying production. So the consolidation of companies or assets that are like, we just saw the Caserones project bought by Lundin Mining. They were already in Chile, already have captive capital there, reinvesting in Chile at a lower tax base because they keep the money in Chile, makes sense. The Japanese wanted out of the project, and it was constrained in terms of exploration because they weren't doing much. And so, they're adding their comparative advantage to knowing that area because they've got 2 or 3 companies working that area. And so that makes sense for them. We see, BHP with, what's that company called, the Australian one? Oz Minerals. You saw that one, and we'll see more, I think, consolidation. But what I want to see is now buying of those development assets that because they don't have a pipeline. Because that'll be the next step. And that's, if you're looking for a trigger, that's what I want to see. I want to see some of these development assets being purchased.
I suspect Joe will be happy. Larger companies have more trading liquidity, which means they have higher share prices, which means they have a lower cost of capital. The natural direction of capital markets in capital-intensive businesses is that companies with low cost of capital outcompete companies with high cost of capital. And either the share prices of the smaller companies go up or the big ones take them over. Most, I think, of the difficulty has to do, A, with the difficulty establishing net present value because of time to production and odd and variable fiscal regimes. But in fairness, it also has to do with change of control position provisions, with management greed and larceny in the small cap sector. There's something that investment bankers cynically call true yield, which is the yield to management officers and directors. And it's not uncommon on the Toronto Stock Exchange to have officers and directors have 5-year change of control fees. We've seen several microcap deals where 40% of the total transaction valuation went to non-shareholders. And I think that one of the cautionary things that people need to look at with regards to M&A are the variability of time projections and the greed and larceny of managers. But I think it's inevitable. I think at some point in time, the shareholders of these companies wake up, slap themselves in the face, forget about narratives, and start focusing on return on capital employed and the division of benefit between the people who put up the money and the people who run the money. I think the future is very bright. Agreed.
All right, well, thank you so much to both of you for taking the time. This was a fascinating and wide-ranging conversation about critical metals, and I think we also drilled down and we got some very specific recommendations from both of you, so I really appreciate you taking the time.
Thanks for the opportunity.
Thank you.
I'm Ernest Hoffman for Kitco Mining. Keep it here for more coverage from the Mining Investment Event of the North here in Quebec City, and don't forget to subscribe.
Kitco Mining special coverage of the Mining Investment Event of the North is brought to you by EMX Royalty Corp.